That's okay. So as I was trying to say, we're going to start the meeting with Sarah Menchaca from Southern California Funding. Sarah, welcome today.
Hi, everyone. How are you?
Good, thanks.
So yeah, I do have a quick market update for everyone. Real quick before I get into the rates today. Really, the number one thing that's driving the interest rates is the Fed's goal to bring inflation down to 2%. So with that being said, I mean, the inflation rate as of July was at 3.8. So we are getting closer, but we're not quite there. So really, I mean, I think the rates are going to kind of stay where they are, if not, increase a little bit by year's end. So for today, a conforming loan. So this is for Orange County, any loan limit with 726, 200,000. I am basing this off a credit score of 760, a 75% loan to value, the home being a single family home and a primary residence. The rates today range from 6.5% to 6.999%, and that is with 1 to 0 points being charged. A high balance loan, so this would be anything up to a loan amount of $1,089,300. The rates are ranging between 6.875 to 7.375, again with 1 to 0 points being charged. And then a jumbo loan, which is anything above the high balance loan limit, the rates are ranging between 7 to 7.5%. And again, with 0 to 1 points being charged.
Well, so Sarah, what would it cost for a buy down on a loan amount of $700,000 for example, a 2-1 buy down? Does it fluctuate each day?
So it doesn't fluctuate each day, and anyone who wants that for their client, I can go ahead and create a chart for you. But basically how they calculate it is they take what the rate would be. So let's say you're locking in an interest rate of 6.99%. And you're buying down that rate, you're doing maybe like a one buy down. So you're going to buy down that rate to 5.999%. The difference in payment between those two interest rates over the 12-month term is what you would pay for the buy down.
Uh-oh.
Does that make sense?
Yes, it does, as a matter of fact.
Okay. So yeah, so I have done that. I do have a very easy chart that's easy for an agent to read and for your buyer to read, that can show, what it would cost, for the seller to contribute to the buy down. If agent and seller want to help contribute to the buy down, and even as an LO, we can also help contribute to the buy down. The only person who can't really pay for it is the buyer.
Okay. And why is that important? Because builders today are offering buy downs. So it's common, as a matter of fact. And then sometimes the other thing that a builder has over us, they can buy forward commitments in the lending market. So that they, in a sense, can buy an insurance policy. Say, I'll pay X amount to have available to me $30 million in financing at this rate. So that's something we're competing against. But the buy downs are something that's being commonly offered at new housing tracks. So keep that in mind when negotiating transactions, or if your buyers are hesitant. So the gamble is, our rate's going to go back down in a couple of years. I don't know. Nobody knows. But at least in the meantime, it reduces some of the payment shock they're experiencing right now. Oh, it did freeze?
Yeah, this computer did.
Oh, that computer. So Sarah, are you and your daughter Swifties?
We are.
I was just curious. As you went to the concert, right?
We did make it to the concert. It was quite a night. It was her first big concert. So at the SoFi Stadium.
Wow. That sounds like a lot of fun.
We did the bracelet making. We did it all.
Was it sold out?
It was sold out. So we actually got lucky. We had friends who had 2 extra tickets that someone else weren't able to use. So we didn't have to pay, the $1,000 a ticket.
Wow, that's even better, huh? She went to the Taylor Swift concert and took her daughter. I assume your son didn't go?
No.
Well, how about Danny?
Oh, no, just me and my daughter.
Well, that sounds very exciting, sir. I'm glad you were able to take your daughter. Sarah, thank you very much. If anybody has questions, please contact Sarah. Sarah, you might consider just posting once again your contact information in the chat box if you would.
Absolutely.
then
Thank
next,
you, Rich.
thank you. So next on the agenda is Mary Gwak. She's walking up here. She's feeling really good about herself today. She got a reconveyance going back to 2004. So
It's really exciting stuff in the title business.
So we're seeing a lot more fraud in the industry. And so I've asked Mary to address that, and she has some real life examples. And then there are a couple of things I wanted to mention about the listing contract when taking the listing contract. But Mary, welcome today.
Thank you so much. Good morning, everyone. For those of you zooming in and for those of you here, Mary Gwak with Lawyers Title. I'm going to have Carlos put something up in a minute, but a few of the things that we're going to be discussing just so you have an idea. First and foremost, I wanted to talk to you guys about uninsured deeds. It's something that many of our agents are not really, we don't hear the terminology very often, but it is very, very common when you pull up property records, for example, like a property profile. So what I'd like to do is kind of educate you on what an uninsured deed is, what you should be looking out for, and what to kind of expect if you're in a transaction. So first and foremost, deeds there's grant deeds and there's deeds of trust. For the purpose of this conversation, we're really talking about grant deeds. So that's the ownership deeds. It could be a grant deed, it can be a quitclaim deed. When you purchase a property as a buyer, you will receive a grant deed that basically says, Mr. John Fasola, the seller, hereby grants the property to Miss Mary Gwak. That means that I am the new buyer. That deed will actually have something on it that typically signals to the universe that it is insured, because most of our transactions that take place have title insurance and escrow. Can we go into the, and for those of you that are here, Polly passed out some packets, and the packet actually, if you go to the second page where it says grant deed, I just used a sample property that I knew had some uninsured deeds on the chain of title. So page 2, please. Thank you. Okay, so you guys will see here, if you look on the upper left-hand side, there is a stamp that says recording requested by First American Title. So that would be my first clue that there was a title company involved. So the property was likely insured. The second clue is if you look down below where it says JD Escrow, there's an order number and an escrow number. The order number means that there was a title insurance company involved again. So the barcode to the right where it says 4/22/2015, that's the day that this sale closed. So for the purposes, again, of this conversation, this deed has been vetted, if you will. There were people involved. There was an insurance company that looked at the chain of title and insured to the new buyer, who was Long Tong LLC. So that's the new buyer who received the property with a full title policy. So this is kind of the perfect case scenario. But more often than not, and I say this because we live and work in Orange County, I'm starting to see such a high number of uninsured deeds. We'll go to the next page and you will see. So the document itself looks very similar to the last one, obviously with the meat and potatoes of it being different, because now the owner is Long Tong LLC, who acquired the property with an insured deed, right? Go back to the upper left-hand side, you see there's no order number and no escrow number. So this means that this owner very likely just kind of drafted up the deed or got assistance from someone and drafted up a deed to place it into someone else's name. Now, this particular property I'm familiar with, so they are a party to the LLC. But when you're looking at a property profile and we give you a series of deeds, if you see that there are multiple deeds and you can't decipher it, that's when you want to reach out and give me a call, especially if you're going to a listing appointment. But at the very least, you're going to want to try to kind of examine it to see if you can pull together, okay, was this a transaction or was this just like a zero consideration? So Up on the documentary transfer tax, it also says this is a bona fide gift and the grantor received nothing. So typically uninsured deeds are where there's no money exchanged. Why do we have to find this to be something that we should be cautious about? First and foremost, this is the way that fraud is commonly taking place. Another reason is because sometimes the people who are granting or deeding the property over don't really know exactly the extent of it. So in this case, the LLC has given the property to Tom. So what we do in a transaction is if this property were to go into escrow and we got an opening request that Tom is the owner, we would actually need to see something from the LLC. They would have to sign what's called an affidavit showing that they meant to give this property away as a bona fide gift. So a few things to look after with the uninsured deeds is what we do and what you guys need to be aware of, because there will be questions in the transaction. We will actually be looking to verify signatures. So just because this LLC deeded it over to Tom doesn't mean that they don't need to reappear. If this was an open transaction right now, Carlos, can we go down a little bit? We need to make sure that the person who signed as the manager and the member, this is an LLC, so it's a little different, but whether it's an individual or a manager and a member, we're going to send a secondary notary out. And that's one of the reasons why we need that affidavit, because there was no title or escrow involved when that deed was executed. So for all I know, the LLC really didn't even have this person as a member. Yes.
So to take it a step farther, how do you know who has authority to sign on behalf of the LLC?
We would have to look at their corporate documents. It's the.
Would that be the operating agreement?
Yes.
It takes it a next step even. You're going to have to ask for those underlying documents to prove that whoever is signing
That's
has
correct.
authority to.
That's correct.
And that makes people angry.
Yes. People get very angry, guys, both at William and myself. So in an LLC, it would be the operating agreement. In a family trust, it would be the trust documentation or possibly a certification. But basically, when a deed like this is on a chain of title, it is our fiduciary duty to be alarmed and to be extra cautious. Because guys, this deed itself, I can tell you, me and 1,000 other people can draft this up within 15 minutes, and it would cost about $20 to go get it recorded. It could also cost you probably about an additional $500 to $1,000 to get a fraudulent notary or a notary to notarize the signature. The county recorder's office does not vet who the owners are. The county recorder's office does not even look at the chain of title. Just as long as this is filled out completely and your notary stamp is legible, they will record it. So if you were the owner of this property, let's say theoretically you really were the managing member, you had all rights to this LLC, and somebody took it out from under you, and then this tran person goes to sell it, right? If title and escrow were not in place to basically stop and review, the property would be sold from under it. And this is happening more and more. It's not just your typical, one of the most common things that we've heard over the years is like vacant land. People are causing fraud and taking away people's vacant land and selling it for large sums of money. But it's now happening to real properties. So in probably the last 12 months, I've had across my desk 3 or 4 different scenarios where this has happened. And if they were to go sell it, they need to address this. They need to make sure that they can supply enough evidence. So if it really is a legitimate, whether it's your own LLC or a family member's LLC, it's okay. But do know that it's something that you have to stop and look at. Couple of the things that you need to think about when you are helping a client or advising a client or reviewing a file that has an uninsured deed, first of all, is that we will require an affidavit. And we will require that the person who signed provides one more signature with one of our notaries. So when we say our notaries, it would be someone like William, because he's the escrow officer, or it's got to be a title company vetted notary. We won't allow for that person to take that affidavit to even a Chase Bank or a UPS store. So that's another thing that we get a lot of screaming and shouting for, because they want to go to their local UPS store, but it's really for the protection of the consumers, right? So our notaries kind of know what to look for, whether it be fake IDs, or they'll just have a sense because they're doing this for a living, exclusively the real estate documentation versus someone who's standing at the UPS store. In regards to the uninsured deeds, now that we've talked about the portion that is, you know, a little cumbersome in a transaction, you're going to come across people who want your help or ask you if you know anywhere that they can go to change title. Few things that I'm seeing quite a bit of right now is, you know, whether it's between parent to child or siblings who have bought together, and one wants to come off of title. They would create a deed like this. You know, I give them my regular spiel. I'll help them out. I let them know what needs to be done. But now, in addition to the conversation of taxes going up, one of the things that we're seeing a lot of, loans are getting called. So just this last month, I've had 2 different phone calls of people having their loans called.
Because of transferring their interest in the
Yes.
property?
Yes. We never thought it would happen, right?
Yeah, wow.
But it's in a deed of trust.
It is.
It is in a deed of trust, and that's always something that I tell people. Unless it's between husband and wife, the lender reserves the right to call your loan and demand balloon payment. Give you 45 days. So where we're seeing this a lot is, you know, parents have helped. They call it co-signing, but it's really not co-signing. They were both borrowers on the deed of trust. They were both on the RPA for the purchase. And then 2 years later, dad wants to come off of title because Johnny's good. He's set to go. He's making the payments. So dad comes off of title. Within about 45 days to 60 days, these people are getting a notice. They're getting a certified piece of mail, and they're getting phone calls saying you violated the terms of your deed of trust. So unless it is between husband and wife, it is something that they need to be really wary of.
Would you say they're doing that because they're probably at low rates, so they want to get out of it? That's one
I
reason.
think, yes,
And number 2, if they were to put in a situation, you said the dad back on.
Yeah.
Would that cure?
I think that's at the lender's discretion. I had one where that's what they try to do, and they said no.
They said you already
Violated it.
Now you're trying to circumvent the system.
Yep, the deed's already transferred. You've already diluted it.
Okay.
So lastly, in addition to the loan being called, something that a lot of people don't realize, when you transact changes to your title after you close escrow. So let's say Carlos and I were partners and we bought a property. Lawyer's title insures us. And then 2 years later, I come off of title and I give 100% to Carlos. What that actually does is it dilutes the title insurance policy. So lawyer's title insured 50% to Mary Gwak, 50% to Carlos. If Mary Gwak is gone, Carlos does not receive insurance for the other half. So
Get a new policy?
you can get an endorsement, yes. But an endorsement is tricky because you can't get an endorsement if you have a deed of trust on your property. So if your property is free and clear, you can get a deed of trust. Now, the only exception to that title policy becoming null and void is between husband and wife, or if it's going into your own trust. It does become null and void if it goes into your own LLC. 95% of the time. It's a very simple endorsement. And that endorsement you can have a deed of trust on.
So even if the LLC has the same pro rata ownership as it did before it was transferred into the LLC,
Yes,
it's terminated.
it's terminated. And we used to never come out and publicly say that, but there have been a few case laws in the last 10 years where title companies have won suit. So now that's what we basically say, and we give them that as a caveat. The endorsement is purchased through your original insurer.
So the typical consumer today have to look at their policy, contact title, and ask for an endorsement.
Yes, yes. So I'll kind of tell you how that plays out. If Richard were come to me and say, hey, I bought ABC and bought it in my name, I want to put it into my LLC. What I'll do is I'll draft up a deed. We'll pull up his old title company. I'll have him send them the deed and say, hey, I'd like to purchase an endorsement for this deed prior to recording. And then once you get their confirmation that they'll issue an endorsement, some title companies will say, send it to us, we'll record it. Some will say, send us a copy of the recording. And that's fairly simple, just as long as it's a sole member, right? It's from Richard's name to Richard's LLC, not if it's Richard, John, and Carlos's LLC. They won't get involved with that. Yeah. So that's kind of something that
Big issue. There's a lot of estate planning where people transfer properties into a different entity.
yes.
And they may lose that title insurance.
Yes, yes. What I typically say is if it's been quite a few years since you bought the property, it's probably a small likelihood of a title claim coming up. But if it's recent, so we get a lot of buyers who close transactions and then 2 days later they want to put it into their LLC. So a couple of cautions around that, because that's an uninsured deed also, right? Couple cautions around that. That could be a cause again for your lender calling the loan because you failed to tell them that you're going to put the property into the LLC. And in addition to that, the title policy becoming null and void. So with a lot of the loans, if you are doing it not too long after your transaction, where they catch it is when they're going to sell their portfolio, when the loan's being sold. So we get a lot of people. I just had one last week from one of my very good clients, boyfriend and girlfriend. So they're not married. They've just habitual boyfriend and girlfriend. They're not domestic partners. They were really buying the property together, but one had bad credit. So only one went on title and the loan. And a week later, they wanted to add the boyfriend. And I said, you're going to be subject to these two pitfalls, and guaranteed based on where you got your loan from, that loan's going to get sold in the next 60 days. So it would probably get caught. I hope I'm not scaring you guys too much. Title is still fun. Yes.
An exaggeration.
Okay. And lastly, when there's title changes like this, the other thing that you guys are seeing or will be hearing about from your clients if they did it without proper advice is property taxes can go up. It's a very small group of people where their taxes won't go up. So this particular deed, guaranteed their property taxes will go up. So they bought the property, let's say in 2020, and then they make a deed change this year, the property will go up to current market value. So just because it wasn't a sale does not mean that the county cannot not reassess.
Even if the prorated interest is the same.
If the prorated interest is the same, it's okay.
Yeah, it's okay, right?
Correct. But like in this sample, right, it was two separate people, the member and the recipient. They could be family members, but it was different individuals. So when it goes from Richard and Mary Ann's name to their family trust, it will not be reassessed. If it goes from Richard to one of his children and they're not both occupying the property as a primary residence, it will go up. If it goes from Richard to me, it will definitely go up. So most instances it will, unless it's the same proportional interest going to the same party. So, whether it's sometimes it's even a name change, right? It could go from Alice Smith, and then Alice Smith gets married and she goes to Alice Gwak. It could end up that you just show that on your preliminary change of ownership that it's due to a name change. Then it will not. The county basically says if the actual ownership changes, we reserve the right. And that too, guys, people do it. And I've had people basically wanting to gamble with me, right? They say, well, is there a small chance it won't go up? Said, there's, you know, anything could happen. There's a small chance. And they'll go ahead and record it. The next year I'll get a call. Oh, it did go up. It went up by $9,000. Yeah, it did. They're like, well, can we undo the deed? No, no, you can't undo the deed. That's kind of similar to what John was asking about the lender. You know, if you put it back, once they got you, they got you. So those are, especially with how high our values have gotten, those are some pretty important things to keep in the back of your mind. And what I typically tell my clients is for you guys to know, if you start getting these questions, feel free to connect them with me and I can kind of explain it to them, because it's a lot. And sometimes if you don't ask the right questions, you don't really know how to answer them, right? So I can help you guys kind of segue in there and get you that information. Okay, identity theft. It's coming in all different forms and shapes, guys. Richard and I were having a conversation a couple weeks ago, just talking about it's becoming a little more common and mainstream for us in title. So you know that title companies, we all have an escrow division, especially in other states. A bulk of the escrows take place within title company escrows. So it is, I don't know if it's a written in policy, but it is very, very mainstream part of the transaction for us to ask for IDs. Even prior, obviously, when the seller is signing the deed, they are to supply an ID. But we're finding that when you're dealing with people in this day and age, oftentimes there are real estate agents that have never met the seller. There are real estate agents who have transacted a 3-month relationship to get the listing, and it was all done via telephone, email, text messages. They don't have a relationship with them. So with our family of companies, which is quite a few title companies across the United States, escrow officers make it a part of the transaction. Now, typically they give the agent a heads up, like, oh, do you have a copy of the seller's driver's license? And the agents will come back, you know, typically pretty annoyed, saying, well, why do I need a copy of their driver's license? But let me ask you guys, when you're taking a tenant application, do we not get a copy of their driver's license? I mean, it's pretty, we get their ID, right? And it's pretty common, it's pretty mainstay. But how do we really know that that seller, unless as an agent, you're the next door neighbor, how do you really know that Carlos Rodriguez is Carlos Rodriguez? We don't know, right? Now, I say that very delicately because there are so many great fake IDs out there too. But we all have to kind of start somewhere and then putting pieces together. And that's what title and escrow does. But we need the support of you guys. We need you guys to be a little more diligent. It's not that out of the ordinary. I would say that probably in the next 5-10 years, we're going to probably get to a point in our industry where it's just mainstream. It wouldn't be that unusual for me to walk to Richard's dining room table for a listing appointment, and while I'm doing the contract where I ask for ID. I don't think it would be that uncommon, but let's think about it, right? I mean, you're basically having someone sign a contract without even really knowing who they are. For everything else, we have to show an ID. I mean, I guess it's gotten a little more loosey-goosey, but I remember back in the days, even with like credit cards, right? Before all the machines, if you didn't have a signature in the back, you'd have to show an ID. But now it's just we've become so lax and so loose about it. I had a let me back up. It was not my transaction. It was with one of my competitors. I got a call last year and it was for a house in San Marino, LA County. And it was an elderly lady who had lived in the house for 40, 50 years. Her husband passed away. She was grief stricken. She basically shut the blinds, packed up 2 suitcases, and moved into a senior apartment 3 cities down. And in that time frame, neighbors were staying in touch with her. But basically, a group of imposters, fraud con artists, took over this property, and they had 2 transactions around it, and they took off with $1.6 million. And it wasn't until she contacted her real estate agent and said, people are telling me there's strangers coming around. Can you go check on it? And so we ran a property profile, and I said, Keith, she doesn't own the property anymore. She sold it and it's insured. He's like, no, what do you mean she sold it? She didn't sell it. I said, well, is she sound mind? You know, because you're dealing with so many different people right now. Totally sound mind, but basically somebody who felt brave enough and knew that the property was vacant, property had no loan on it, got an ID to state the seller's name and approximate age, and worked with their counterpart, who was also a fraudster. So there were 2 transactions to make the title and escrow company believe it. So the first transaction was between the 2 fraudsters. Fake seller sells it to a buyer. Real money was exchanged. So they had enough money to exchange it. So the fraudster sold it to his buddy for $800,000, and then turned around, and that buddy who bought it for $800,000, still a fraudster, placed it on the MLS with one of those .com MLS companies that all they do is import into MLS for you, almost kind of like for sale by owner. And they sold it to actually a very well-known investor group who works out of Huntington Beach. And the title insurance company issued a binder. I mean, the whole thing was so well done. So well done. Carlos, can we go to the, this I did not put in your printout, but I got approval that it's okay to show you guys this. I'm going to show you a couple copies of IDs here. This is not for the one in LA County, but just to show you guys these driver's licenses and the passports that people are putting in front of notaries. And this is why, you know, some of our own notaries have a little bit of a better eye, but this is an actual transaction that took place in the Northwest where he purported to be the seller. He sent a copy of his ID, but it so happened it's a smaller town, and it was a vacant lot that had been vacant for decades, but it was on the market. He was selling it for sale by owner, $250,000, and it was going to be a very short transaction. But something happened within this title company and escrow company where they knew about the land. So they called the owner. They called Mr. Christopher, except it was the real owner they called. And he said, no, it's not. I'm not selling my property. I'm not selling that property or the other one. So the title companies we have an internal way of notifying each other. We can flag people and we can flag parcels. So they basically went on a hunt for everything that Christopher owned and found that there was another open transaction. This particular transaction was $255,000. The other one was $500,000. And they were able to stop all of it. The real Chris had no idea. They made this information just enough. There were tidbits that were different, like the birthday was different. I don't know why they didn't get that right. But I know that we're looking at a photocopy. My point is, even when we go to this extreme, we don't know. We don't know. So the very least, we should start asking. If it's too much to ask for people that, you know, you're getting your listing from, I would say, you know, you don't have to be an alarmist, but our intuitions are pretty they're pretty spot on most of the time if you're paying attention to them. So if you have a strange feeling about something, let William know, let title know, and we'll do some of the investigating. That's part of what we do. Because if we close this $255,000, guess who's on the hook? Lawyer's Title is on the hook of giving Mr. Chris Dennis his money back. The same thing with the lady that I told you about in San Marino, $1.8 million, right? So First American Title had to pay the investor back the 1.8, and they had to get the title back into Mrs. Lou's name. And they did all of that for a $4,000 premium. But my point is, it's not something that you want to be involved in, even if it's not out of your own pockets. It is long and grueling. And honestly, I think for us in the industry, we have somewhat of a fiduciary duty to make sure that our consumers are protected. So the next time that you're in a transaction, your sellers are yelling at you because additional documentations are asked for, it's really not, you guys. It's a lot of money that we're moving around for people. It's a lot of money that people are entrusting you, your escrow, and your title company to get from point A to point B. And if it's not getting into the right hands, you know, we're all so electronic now. We're all so quick, like everything has to be so quick. So that's the thing that people don't want to do to provide secondary forms. We've had situations, I haven't had it recently, but my old title manager, Glenn Auerkamp, has had situations where he would ask for secondary ID because something didn't look right. So he would ask them impromptu, and he would say, if they don't supply this to me in the next 45 minutes, something's not right. I'm not going to insure. And he's had those situations because he'll have like a lead up. He'll say like, oh, okay, Mr. Dennis, are you home? And he says, oh yeah, I'm home. Okay. And you just spoke to me a little while ago that you traveled to Sweden. Can I also get a copy of your passport? If he says, oh, I don't have it, then we're going to start getting a little more anxious and a little more suspicious. So it's not suspicious to make lives difficult, because trust me, we want to close the deal as much as you guys do. But if the moment we close it, if it was fraud, it's done. The money's probably gone. Any questions, guys?
Yeah, as a matter of fact. So when we talked about confirming transfers through an affidavit, so what if the grantor is deceased or we can't find them based on for the last transaction or transfer?
If we can't find them, it's a big problem. If they are deceased, typically our workaround with that is we ask if they can help us obtain a death certificate. And if I think it's the informant or, you know, the person who filed for the death certificate, they would have to somehow communicate with us. It would be in the form of a letter or an email to say, yes, that was my deceased mother. That would be good enough for us. In the matter of you can't find them, that's a big problem, guys. So that actually is a great lead up to something I missed sharing with you. Let's say hypothetically you are the recipient of a property, but the person who is giving you the property does it as an uninsured deed. For whatever reason, you do it as a bona fide gift. If I don't have a solid relationship with Richard, but I'm going to take that deed and I'm going to pay him under the table $200,000, that's kind of a problem. What if I can't locate him 10 years from now? We'll make you bond around it. I've not had too many situations. I think I've had one where someone actually did go out and get a bond because they couldn't, we knew the person was alive, but they just couldn't locate him. But now, for the most part, they are locatable. When a seller tells us that they're not locatable, it's a red flag, because it typically means they're in some sort of a bad relationship. And it happens between family members too. So they say, oh, well, they're gone. They can't sign it. They're already gone. Why do you need it? That's the very reason why we want it, is we need them to reconfirm that what they signed is what they intended to do. So for clients that are thinking of transacting in a document like this, I ask, may I ask why you're doing this? So they'll say something like, oh, well, I bought this with my sister, but our relationship's gone south and I just want to take care of this now while we're still talking. And in that case, I would typically say, that's fine, but that she's going to have to come back and sign again. Even though on the deed, you are the owner, she will need to still confirm that that deed is what she wanted to do. And oftentimes it's not, it's not the right solution. Lastly, uninsured deeds are not a guarantee of avoiding liens. I wasn't following my notes on my flow chart. Sometimes people want to come off of the chain of title because they have an inkling that they haven't paid their bills or they haven't paid their child support or whatever it is. And they come off of title hoping that no one will find out. There are instances where they could possibly escape the situation. But if someone has an American Express lien or a child support lien, and they've been notified of it on January 10th, and they come off of title on February 10th, there's no lien in place, it could still be that they owe the money. That's kind of a gray area, and that's probably really more another class, but it cannot be a guarantee of avoiding a lien, changing your name or removing your name off of title, because we get that a lot too, a lot.
If you have a tax lien and then you find out on like May you have a tax lien, you get a tax stuff.
So what I typically tell people is it's really going to be up to the title officer. It's not black and white, because American Express or the creditor can come after us because they could say, well, we had a certified letter that went out such and such day. You didn't do a good enough job when they told you that they didn't have any outstanding judgments or impending lawsuits coming up. Because when you, as a seller, we sign paperwork basically saying, to the best of my knowledge, under penalty of perjury, I don't have anyone that I owe money to other than what's here. So we've had those situations. If it's way far down, then typically you can ride around it, but it's not a guarantee of avoiding a lien. I mean, if it were that easy, we would all do that, right? Just go rack up some bills and come off of title, but it's not.
So in your property profile, do you provide copies of the grant deeds? The most recent grant deed, I haven't looked at your profile. I usually go online and look myself. So I don't rely on that. But so the question is, obviously, if you go online and run a property profile, you can choose the underlying transfers,
Yes.
the deeds, or if you actually run that for them, you include
Yes.
how far back do you include those underlying documents?
My clients receive basically all of the deeds for the current owner, insured or uninsured. So let's say that I bought the property, First American insured me, and then I made 4 title changes. I would receive all of those deeds in order for the agents to basically know, because sometimes it's like, oh, wait a minute, there's someone that was missed, right? I mean, we've talked about like where the chain of title is broken. So I want my clients to see all of it. So we do include all of the deeds, not just the latest recorded deed.
So don't sit down yet. I still have another question or two. So Mary had mentioned, I think it's a great idea, that when you're going on a listing appointment, that you ask for a copy of an ID. Why? Because you're protecting the seller. It's an easy presentation. I'm protecting you against fraud. So with that said, the other thing, you should be looking at a property profile. You should be looking at the underlying documents, the grant deed. And the other reason you should ask for that ID, you want to compare the name of that ID to those underlying documents, because the name may not be the same. And then we have issues later on when we're trying to sign a grant deed because the ID doesn't match the name of the vesting, right?
That's right.
So those are all things that maybe you can anticipate in advance of closing, so you have a much better, smooth transaction. You can address things like that too. So there's those things like that, I think, that can come out
Yes.
during that initial meeting.
Yes.
Right?
And in that same conversation, if your property profile reveals that it's in the Mary Gwak Family Trust, even if they don't have it readily available for you at that moment, I would also say, and do you have a copy of your trust that we will need during the transaction? Because that's something that's kind of coming up too with our aging population. Sometimes it's the successor trustee, sometimes it's the trustors themselves, but they go into contract and there's no trust to be found. That's a problem. And they don't remember any of the details. And this is the only property they own.
Wow, wouldn't have expected that. Thank you, Mary. Does anyone else have any questions for Mary? No, Mary, thank you.
Thank you, guys.
Thank you. One other thing, or two other things I wanted to mention: a listing contract. It's important that you always complete the ending date of the listing contract, and that's required under civil code, because if you don't complete or fill in the ending date, not the beginning date, but the ending date, you don't have a valid contract. And then the other thing that's covered by the civil code are pre-printed contracts. So a lot of times we'll, in anticipation of a listing appointment, we'll fill in the percentage of the commission that we intend to collect. So pre-printed forms are not enforceable also. So keep that in mind. So if somebody were to complain or try to terminate a listing contract, that very well may be a valid reason for them to say, hey, we don't have a listing contract, a valid contract, and I'm withdrawing my offer to have you sell my home. So just a couple of things I wanted to mention. You must have an ending date, otherwise you don't have a valid contract. And also pre-printed forms are prohibited under the civil code too.
If you're printing out the form,
Mhm.
just don't fill out the commission and then just have.
That would be fine. You just don't want to fill in the commission and pre-print it. Exactly. It blends in, right? And it must be, I think, at least in a 10-point font if you do have something typed on the contract itself. But I just wanted to bring that up. We don't want people getting out of a listing contract with us because of some kind of technicality. Well, great. Any questions? No? Well, thank you for coming today. We will not have a meeting next Tuesday, so I hope everybody has a wonderful holiday weekend.
Oh, just one reminder
Yeah.
that you guys upload your listing contracts to SkySlope as soon as you get them, please.
Did you hear that? Carlos is asking, demanding that you that you upload your listing contracts
We will
when
chase you down.
they're executed. Yeah. You see how big Carlos is, man? He's working out, so I wouldn't want him chasing me down. Well, great. Well, thanks again, everybody.
Thank you.
Bye.
Bye.